Assalamu alaikum. Today I'll be sharing a really interesting topic with you. Before proceeding, I would like to introduce myself with those people who are lending for the first time on my channel. This is Nabil Sheikh, a corporate trainer, entrepreneur, and investment banker. Welcome to my channel. Let's begin the show. What is the biggest threat to banking sector? Is it cybersecurity? No. The biggest business risk for traditional bank is challenger bank. To understand this business risk, we need to understand the business model of traditional banks and pain points from user experience perspective. Traditional banks have following features in their business model. Number one, middleman. They play middleman role. In addition to safekeeping of assets, their core business activity is lending and borrowing business. That's how they make money. Let's say bank takes deposit at 4% from customer A and then offers loan to customer B at 8%. This difference of 4% is the bank's profit margin or spread. Number two, operating hours. They operate during business hours, usually 9 to 5. Number three, time-consuming procedures or SOPs. They usually take few days to open a bank account and take more than a month to approve any given loan due to branch head office relationship, as branch cannot take prompt action at its own and there are certain dependencies on head office. Number four, products. Existing financial products offered by traditional banks are not customized to consumer needs. For an example, it's quite difficult for an SME or freelancer to get loan or open bank account. Number five, overhead costs. Traditional banks have to maintain branch network to ensure their reach and also centralize head office, performing heavy regulatory compliances and reporting. Now the real threat for traditional banking sector is the challenger bank. Debuting with no physical location, lower overhead costs driven by hyper-focused services, digital banks promise better products with lower fee, available 24/7 and contributing in financial inclusion. For many younger consumers, they were still searching for their primary financial institution, and challenger banks provided an attractive alternative to traditional banks. Let's discuss the revenue model of digital banks and related challenges. Challenger banks typically build their revenue model on the interchange rate charged on the transactions. Even though the companies tout deposit-based services, they mostly rely on transaction volume to drive revenue. While this approach has enabled challenger banks to establish themselves and build early revenue streams, the margins are very small and require massive adoption rates. In an economy that sees spending drop like what occurred worldwide in 2020, dropping interchange revenue can squeeze challenger banks out of the market. Since 2020 began, some pioneers in the challenger bank space like Simple and Movin have ended their consumer activities. Others like Monzo are quoting small and medium-sized businesses, something it had trialed before the pandemic, while Revolut has accelerated its crypto and trading strategies. A diversified income model gives community financial institutions an advantage, but the struggle of challenger banks are a good reminder for leaders to examine their own offering to make sure they provided a variety of services that can drive revenue. Interest-based, interchange, loans, and fee-based services can all provide a healthy path to profitability. Leading challenger banks are now trying to become more like traditional banks. They are looking to expand their product to offer things such as loans, savings, and investment products. However, services such as lending and investing carry a different set of risk and regulatory requirements. Traditional banks have the edge in existing infrastructure for minimizing the risk management and meeting regulatory demands when it comes to more traditional banking services. Keeping all that in mind, most relevant, economical, and simplified product offering will be the winner. In next video, we will be discussing the difference between neobank and challenger bank. Stay connected. Thanks for watching this video. Please don't forget to like, share, and subscribe the channel. Thank you.